Hi fellow traders. I wanted to put together this short tutorial mainly geared towards traders that are not doing this full time, or people that are maybe in different time zones that don't have access to place markets and be place orders right in the market hours, or be in front of the screen to place live orders. A concept that's very important that obviously I've learned from Mark Minervini is progressive exposure, and not to go from zero to fully invested unless I'm doing that on gains. So, well, what do you do if you have a few names that you're interested in and you want to buy them, but you can't buy all of them? You want to buy in the order of breakout, meaning, the first one that breaks out is the one you buy. How do you do that when you're not in front of the screen? So I use interactive brokers. However, what I'm going to show you, basically all the brokers do the same thing. I don't know, I can't really support any other platforms, but I want to show you that they're basically the same fundamentals here, and you can reach out to your own broker and ask them questions. So basically this paper trading account has $2,100 in it. So if you look at my spreadsheet, and this spreadsheet's available on an earlier tweet of mine, and there's a video instruction. You can download this spreadsheet if you want to use this for progressive exposure and position sizing. So let's just say I want these three stocks: GRND, ERJ, SFM. And I want to buy a quarter position, or what's basically a full position, excuse me. So 25% full position. And you'll notice that the full position stop for me, max dollars on a full position, is $26.25 with a $525 dollar value of my position based on an account size of $2,100. So basically what I will do is I'll just put in that I'm going to buy 35 shares, 13 and 4. And I just want to see, can I buy this? Okay, so then I'll go to my chart, and I'll say, okay, well, GRND, I think a stop is the low of yesterday. This is just hypotheticals, but $14.40. So I plug in here GRND 1440. So I look at that and I say, okay, this is 133, which is a little bit above what I want, which is 1.25 risk as per Mark's books. So I can quite simply say, hey, you know what? I'm just going to buy 34 of them. And maybe I want to go to 32. So 32, and I'll try 33, and I'll leave it at 1.26. Close enough. So that is right around the acceptable ratios of risk for my total account size. I'll do the same for ERJ. So ERJ, let's say we want a stop of 37.60. So we'll plug into ERJ 37.60. So this is a 1% of total equity risk, well within my parameters, and less than $26 as per my account size. And now the same thing for SFM. So I'll go to SFM, and SFM we put 142.90. I'll go back here, 142.90. Again, under 1%. Now that's just because of rounding, and I have a small account. I can't buy the fifth stock because that's more than 25% of my account size. So this is just position sizing, something simple, and that's how I calculate using this spreadsheet. So what I really want to show you guys is, now let's move this out of the way, is how do we place these orders on the broker when I'm not, I want to buy all three of them, I want to place all three of them, but I only want to buy one. So there's a feature called order cancels order, and your broker may have a slightly different name for it, but it's called order cancels order on Interactive Brokers. So I'll click GRND, I'll say buy, and we said we wanted to buy 33 shares, and we'll put a stop order, and my stop price was going to be 15.20. So here we have as a day order. Now, again, because I'm trading after hours, I'm not doing after hour trading. I'm just doing it in market hours. So if I submit this as a day order, not outside of hours, this will get triggered when the market opens next at 9:30. So then what I'm going to do here is I'm going to put one cancels another. So I've added GRND. Now I'm going to add another contract. So I'm going to put buy, and I'll put ERJ, and I'm going to put again stop. Quantity that I want to buy of ERJ is 13, and the stop price is 39.20. And again, this is a day order. I'm going to add another one. I want to buy SFM, and again, stop order. Now you can do whatever order types or whatever. I'm just using stops and a buy stop order. And we're going to say I'm buying 4 of these at 147.45. And that's a day as well. So now, what I'll do is I'll hit save or submit, but I'll hit save for now. So you notice that these 3 orders are nested in this little bracket. So what does that mean? That means that, like, if one of them hits, they're all on the same level. So if GRND hits 1520, these other 2 will get canceled. If ERJ hits, the other 2 will get canceled, etc. So by definition, by default, like the order of breakout, the first one that breaks out, I will buy. Now, what about stops? So what we would do then is we would right click the order, and we will say attach stop. And I'm doing that to GRND. So you see here now, I'm adding a stop in here, and you notice that it's nested. Okay? And I'm going to do the same for attach stop for ERJ. I'll fix the prices in a moment, and I just want to show, and I'll do the same for attach stop. So what's happening here? That if GRND does a buy stop, triggers my buy stop at 1520, it will also automatically put in my stop, my sell stop. So that way I'm protected. And the same thing here. So now what I want to do is I just want to correct my prices because it just took a random price. So I'll put what I said, 1440. Okay. And I'll hit here, submit. So I've put them all in there now. I'm just going to update them. Doesn't matter because I'm after hours, right? Nothing really has happened. So I'll go to ERJ. I want a stop of 3760. And I'll update. And then SFM, I will do the same thing, and I want a stop of 142.90. Update. So now these orders are all time and force of day. You'll see that they're nested, but you see the blue is the main parent. So again, if GRND hits, I will have bought GRND. I'll have a stop loss, and sorry, we just want to fix one more thing, and I'm just going to maximize this because I always We just want to fix the time in force, and so I'm just going to modify that order. And you see how it says time in force? I want it to be GTC. So that means that it won't be just a day order. It'll be there for the entire time. And I'll just, I can do that for all of them. I'll just say modify order ticket. And I could have done GTC, but so GTC transmit. And again, you see it won't, it'll wait until the market opens at 9:30. And I'll do the same thing here. Modify order ticket, GTC, transmit. So you see now again, I have three nested orders. One relies on another. And again, if SFM hits first, the other two are canceled, and I'll have SFM stop. So I'm away from the computer. I'm doing my job. I'm a different time zone. But this allows me to buy in the order of breakout and maintain my risk reward parameters, my progressive exposure, and to gently get into the market without going in all at once. Because let's just say I don't have the money as well. Let's say if all of these three hit, I can't afford it. I'm going into margin. I don't have enough gains to cushion added risk. I just want one. So this is the way that I handle it using Mark Minervini's rules. I hope this was helpful for you guys. And again, I can't really answer any broker questions. I use Interactive Brokers, but from my experience, they all do this, and you just have to speak to your broker or look at their documentation. Hope this was helpful.